Hi, what's going on, family? Yeah, I think you guys can read from the article right here from Market Watch. AMC shares fall 14% after movie theater chain announces $250 million stock sale. More dilution. I mean, if this isn't a dead giveaway of what type of situation Adam Aaron is right now with AMC trying to keep the business afloat, I don't know what is. They need money and they need it bad. And they're coming back to the market for that. They got to create out of nowhere $250 million stock sale. If your business is already losing money, where are you going to get $250 million from without actually taking out a loan, without trying to get bonds that you got to pay back? Oh, that's why businesses go public. It's because they have another wallet that they can pull their hands into and get cash from. It's called the stock market. That's the purpose of the stock market. That's one of the purposes. It's for businesses to reach into their wallet, i.e. the market, and get money from it. And rather than them paying back a fixed interest rate from a loan that they would get from a traditional bank, they don't have to pay that back. Because it is the investor that is putting in all the risk, especially those who are buying from a business like AMC. You're actually refueling their banking account so that they can live to see another day. But the more shares that are being created entering the market is going to dilute your value. It's like they're dumping the liability from them, AMC, to you. See what's going on here. Understand when you're getting played in the financial markets. The company wants to boost liquidity in light of the low first quarter box office. People ain't going to the movie theaters like that. The internet has shifted the landscape of how people view movies. Shares of AMC Entertainment Holdings fell 14% in Thursday's session after the movie theater chain and original meme stock filed to sell up to $250 million of stock. The company announced the move in a regulatory filing, saying it plans to use the proceeds to bolster liquidity. Their account is dry. They need some liquidity. They need some cash. So they're going to come to the AMC apes. They want y'all to go into y'all banking account. They want y'all to go into y'all retirement savings and help them out to go out and buy some of their stock, because they need to repay, refinance, redeem, or repurchase its existing indebtedness for general corporate purposes. So that money is going to be used all over the place. How many times has AMC filed for the issuance of more shares? How many times? How many times will it continue to go on? Because the more dilution that hits the stock, the less likely it's going to go higher and higher and higher and higher in price, because there's too much of the stock. They would have to do like a stock split to reduce the amount of shares that's already out in the market in order to bring back some demand. It's too flooded. The market is too flooded with these shares. Among other reasons, the offering is being conducted to enhance the company's liquidity in light of the low first quarter box office, resulting in part, as previously disclosed, from the Writers Guild of America strike and the Screen Actors Guild American Federation of Television and Radio Artists strike that occurred during 2023. Like, these are the things that businesses have to plan for, though. You cannot put this on the artists, the actors. You're in this business, Adam. You know how Hollywood runs. You know how movies work. You should have already known that this is something that could happen. So what was your plan of action to ensure that you will be able to scale away from these type of strikes? Oh, so the plan is to go out and issue more shares. That was their plan. Increase seasonal working capital requirements and the resulting cash burn the company has experienced. Earlier this week, AMC Chief Executive Adam Aron said that the first part of 2024 would be a slog for the movie theater chain, citing the ongoing impact of last year's Hollywood writers and actors strikes. As I have said before, cash is king. The smartest thing AMC did to survive during these past 4 turbulent years was to make sure we had corporate oxygen available to us. That oxygen for AMC, of course, being cash in the bank. Then why are you going out trying to issue out more shares if you got cash in the bank? Something ain't adding up. Because I think this is their second time issuing out shares. So I think they're about to run out of breath. Maybe twice. As noted during our last earnings call, AMC is focused on extending our debt maturities and ensuring that our cash reserve remain robust. This is the recipe for success. Yeah, let's push out the dates of when our debts needs to be paid. Wouldn't that be amazing if you could do the same thing on your mortgage, on your car note, on any other bill that you have a loan for, and just get with the creditors and say, hey, let me push that date out about 10, 20, 30 more years. Like, the benefits that companies have that ordinary people don't get is crazy. They're able to negotiate a longer term debt maturity. And then on the opposite side, they could go out and get more money by the markets by issuing out more shares. That's a win-win. Like you said, that is the recipe for success right there. We can push out what we owe and we can bring in more money without us actually doing anything. Now, during the conference call to discuss AMC fourth quarter results last month, Aaron highlighted the need for cash and pointed to 418 million raised through the company's AMC before equity units, which was converted to common stock in 2023 in August. In December, AMC completed an at-the-market equity offering. Yeah, I knew it was second. I thought this was the second one, raising approximately $350 million as it attempts to reduce its debt burden. And here's the stock right there. So again, there's nothing here. I'm just simply dropping the information on us so that we can see how these businesses really work and operate. And that Adam and AMC is utilizing the market as a pawn to get more cash. That's what they're doing. They're dipping their hands into another account via the stock market so that they can infuse their accounts with more cash, and then they push out their debt maturities that they owe so they don't have to necessarily pay it immediately. But then you look at yourself and you look at your account and the market is going down. Your stock value is going lower and lower and lower, while Adam is taken from you to feed himself. This is how the game is meant to be played in the world of business and finance. Understand when you're on the opposite wrong side of the market. Now I'm going to create this buy zone right here because this was the last low into the market for AMC. Okay, so maybe someone would think that this is a buying opportunity, but like I told you in my last video, I'm not looking at this stock as a buy until I see this market really begin to see some movement to the upside. Okay, so somebody is going to take on the risk of these shares that they're trying to issue out into the market. Some firm is. And the firm's duty is to make sure that they sell those shares to us, to the market. So do you think the AMC Ape community is still viable to come in and buy these shares? Because AMC can't do this much longer. I'm just going to keep it real and keep it a buck. They can't do this much longer. And this is a dead giveaway. If this doesn't work, them issuing out more shares, trying to get $250 million, this company may in fact then go bankrupt. Because where else are they going to get the money from? If something detrimental happens to the movie industry again, that is going to impact how many butts can get in the seats at these AMC theaters, it's not going to end well. But give me your thoughts. Make sure you maintain your profitability. And as always, trade different.